Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, the last entire week of September. We are going to start October next week, and this week has been a little bit more difficult than expected because there were mixed data, one for the bulls, another one for the bears. So good and bad data coupled with the fact that we have a couple of Feds being conservative on the future amount of interest rates cuts. One say 25 basis points, another ones say 50. And finally, on Friday, the core PCE and the personal income and spending went a little bit different than expected. So let's continue reviewing in detail the economic data. So on Monday, we got the 3 global PMI. This is an estimate for September, and as you can see, the manufacturing is the one worrying a lot to Wall Street. We started seeing the labor market, it's weakening, but that doesn't mean that it's weak. It's weakening, it's cooling down, but let's see what happens. The rest of the readings are actually above 50, are remaining in a strong. And on Tuesday, we got prices skyrocketing again, 5.9% from 6.5, and as expected. Wednesday, new home sales month over month decreased due to the continuing increase in home prices. On Thursday, we got the GDP growth rate at 3% as expected, and coming from the previous quarter, the Q1, at 1.6, it's almost double. Initial jobless claims came a little bit as expected, so no news there. And a lot of Feds saying what I mentioned, that we need to see we need to continue seeing progress on inflation. And one of those say 25, another 50. So it's a mixed bag of outlook. And finally, on Friday, we got very interesting data. The main measure of inflation for the Fed, the PCE, came in the core aspect lower than expected. That's a really good check. In terms of PCE, month over month increased as expected. That's another check. Year over year, we are almost at the Fed target, at 2.2% less than expected. That is 2.3. So these are 3 good news. So then why we pull back so much? But this is because the personal income and the personal spending, which shows consumer strength, are both lower than expected and both lower than the previous one. And I think that's a miss, and that's what's concerning Wall Street. Wall Street thinks that, Wall Street thinks that inflation it's already beaten. I'm not so sure, and the Fed should not be so sure, should continue analyzing and going the proper path of interest rate cuts. But what is concerning here is the strength of the people that suffer all this high inflation. How are they? How are the households? How are their income? How are they spending? The consumer spending and the consumer strength should be always assessed. And I think Friday was a big miss. Even though the Michigan consumer sentiment it's still at 70%, I think that this is for consumer sentiment in terms of inflation, not their actual strength. So as you can see, we are still balanced in between 50 basis points of 25 basis points, 50-50 more or less. So nothing really big here. So let's jump into the charts to really see how the price action reacted to this week. This is the weekly chart on the Nasdaq. As you can see, we are in this weekly imbalance and we just rejected. That's all. This is what happens this week. Despite the fact that we increased almost 1% on the daily, we can see also this imbalance, this daily imbalance with up on Thursday, and we couldn't reclaim on Wednesday, on Friday. So we have this flat close, and basically all these days were the week. We tried to go higher and retraced below the daily inverse fair value gap. And this is something worth noting. We took the liquidity and we rejected the inverse. There's still a huge imbalance, a huge divergence between the Nasdaq and the ES. As you can see, the Nasdaq, the ES took all-time highs and continue higher. It's true that we are pulling back from that, but we are trying to hold the previous all-time high. So the ES is being pushed by the broadening of the market, but in this channel, we mainly focus on the NQ, and I think the NQ, it's a clear rejection of higher pricing that we should be taking always into account. It's weak, it couldn't hold, and it rejected at a point at which we should be expecting rejection. This was Thursday, the big push, the big squeeze, my best trade day in 6 months, and then we rejected in between the daily and the weekly consequent encroachment. And from there, we just on Friday we chop, and we finished at the close, at the lows. So as you can see, we on Thursday we opened certain levels, a 15-minute order block, opened this flash on Thursday, and this 15-minute was just a breakaway gap. We tapped the close. We had a volume imbalance that I would like to show you right now. This volume imbalance, it's what I have in blue right here, 15. So this volume imbalance, which is basically including this week, which I had quadrants on there, and my day was pretty bearish. I was pretty bearish going into the open. I tried to take this scalp right after the open, right before the open at 9. It was looking pretty good because basically we rejected buy side, we rejected the inverse, we had an open, and we had the order block. Everything was here. My entry was in this candle, the stop was here, and I was just targeting these equal highs, relative equal lows. Minor sell side for just a scalp, 24 points, 2.3 residual ratio, 10 points of risk, and I got stopped out at break even. At break even here, I almost got stopped out at break even here. I put my stop at break even because I didn't trust anything of this. We were so choppy. It was not clear, efficient price action. And I really noticed at this candle, it should have gone right there. So nothing in this trade, and then at the open, it was almost another setup, but I had an unforeseen issue and I couldn't take it. But look at this again. High, low, high, low, high, leaving behind order blocks. So this is an order block, and the block that goes into another order block is called propulsion block. So we have the previous rejection of the buy side, and we have these two inverse fair value gaps open, rejecting. I mean, this was a clear, I should have taken this entry. Risking 11 points for at least these relative equal highs. 2.2, that is the main setup, the same setup as this. It should have worked immediately. Nice trade. But I couldn't take it. So the Nasdaq continued lower, opened the first fair value gap. In this case was a bearish fair value gap, and we rejected. Look at this. In here, once it did this, I was already confident that we were going to see a lot of bear price action. So where was my target? My main target was these lows, and that's what happened. We chop, and then we took, and then we continue lower. And look at this price action. It's just very weird, very difficult to trade. It's a Friday price action. It's quite nasty. And if we see the 1 hour, we can see that we took Thursday's low and we rejected, but then we close at the low. So pretty, let's see the imbalance. This is the imbalance. This is the consequent encroachment of the week on Thursday. So pretty pretty weak, I would say. And it's weak because Amazon, very tied to consumer discretionary, saw this income and spending really low and it went lower. Google, a little bit on the green, Nvidia minus 2%, and banks mixed. The entire semiconductor sector was all in the red. 2% the sector, 5% TSM, AVGO 3%, ARM, Micron. So pretty bad. The dollar it's continuing its weakness, weakening even. I mean, it's below everything that I'm trying to consider here. This is basing, but who knows what it's doing? It's right at parity. It's right above parity. The yields continuing going lower, so we are still seeing continuing decrease of yields, and the inverted yield curve is still skyrocketing at 0.191. So the bomb started ticking here, and it's been 2 weeks since then. So who knows when the recession is going to be called, or maybe not. What is true is that the Nasdaq it's quite weak in comparison with the ES. So being this weekend with seeing this weakness and seeing that the Russell is also not being able to really do anything. Let me just see what kind of, oh, that was the gap. So the Russell is weak, RSP it's continue broadening. We are now breaking the trend, so the market is broadening. We are not being focused on tech, that's all. And the bad thing, the sad part is that we like to trade NQ, so we have to really be careful. The ES is at all-time highs, but it's also showing a little bit, it's reluctant to going higher. Look at this, red, green, red, green, red, green. It's barcoding at the all-time highs. And Nasdaq is pretty weak. There's a huge divergence, huge SMT on the daily time frame, as you can see. So time is fractal, price action is fractal. We are seeing a huge rejection on the Nasdaq on this daily and this weekly. So that's the only thing I want to see. I want to see for next week. Let's try to clear everything and perhaps see things more clearly. Just bear with me a minute, because I just want to see the Nasdaq hold this volume imbalance. I don't want the Nasdaq to continue going lower, reject the daily volume imbalance, and continue. That would be quite bad, and we will start looking for this kind of liquidity, this 1 hour week. There's a lot of structure down here that we left behind that we might be looking for that. I mean, this rejection up here, it's quite important. So if we have a big fair value gap, breakaway gap, we try to go higher, we trapped, and we continue lower, what is this? Exactly a model that we would trade in the intraday. So lower highs, manipulation move here, and then move lower, taking all these. My expectation is to continue lower. My expectations for the Nasdaq is continuation to the downside. The ES should reject all-time highs, should see also lower pricing, and then that will give me the confidence to take some shorts for the NQ. Price action is telling me that, guys. It's just like that. I'm not worried about the economy right now. I'm just worried about what I'm seeing in the price action. I'm seeing rejections, manipulations into a bear model. And this huge level into an inverse might be the key. So that's the thing, guys. I think we might see some kind of move towards this big zone of liquidity down here. As you can see, there's a lot of liquidity below 20,000. So that might be the case. That's all from my side. As always, thank you for your time. If you found this video useful, remember that these are the weekly recaps that I do on Saturdays, but also from Monday through Friday, I do daily videos for Monday forecast, market updates, and market recaps. I appreciate your time. As always, remember that trading is your best skills for trading, or if you want to success in this industry, are patience, discipline, and risk management. Work on those, do your own analysis, but also take off some time from charts, screens, enjoy the weekend, and come back on Monday. I will be waiting for you to see what this market wants to do. I'm quite bearish. Let's see what happens. Have a nice weekend and see you on Monday.